Okay, so now we're ready to start to look at how we can put all of those individual concepts that you have just learned and kind of put them all together into obviously what makes up the photon strategy, and how we can obviously build trade ideas using those concepts and then obviously execute and manage one of those trades. Now, you have seen, countless amounts of trade examples as we've been going through each of the lessons, but I think this is just a kind of useful, useful point for you guys to kind of, look at a trade that basically I recently took, for me to break this down nice and slowly, and for you guys to kind of hear my thought process of how I'm, viewing this and then executing this in the live market. So, as always, we start with our top-down analysis. Now, for me personally, my main two time frames are the 4-hour and the M15, but I will always know, where we are within the weekly and the daily time frame, just so I have those on my side and I have a good idea of where we are trading within those time frames and kind of what the overall longer term trends are. So, kind of the first time if you're ever hopping on a chart and it's a blank chart, you do need to kind of have a good zoom out and just have a rough idea of where your highs and lows are, because if you just jump in straight to say this section of price action here, you may think that, right, okay, that's a lower low, that's a lower high, and that's a lower low. So you could think, well, this is the weekly range we are within. So if price was to come up here and break this high, then the weekly would be bullish. But actually, if you zoom out, you might find that you have your lows and highs completely mapped. So what I would always do the first time I ever look at a chart for the first time is just have a quick zoom out and just make sure, well, this is how I do it, right? We can see we're in this big range here, and then back in 2014 we clearly broke out of that range with pretty much one straight swing leg to the downside. You can see how there was a bit of a minor pullback here, but for me that's not part of that's not a swing pullback, it's just a minor pullback. So at that point, if I get rid of the orange line, there we go. This would be my swing high at that point. If I get the paintbrush tool to work, there we go. That'd be my swing high, and that would be my swing low, okay? So we start to pull back, and then eventually we come down, and we break that low. If I draw the line across, you can see that. Draw it from the wick, okay? We break that low to close below the low, okay? So now that for me is a break of structure. So where is the highest point that broke the low after that low was formed? So we look back, this is the highest point, okay? So then price comes up and it breaks that swing high to the upside. So now the market is bullish. Again, I'm not going to draw these all on, right? Let's just try and keep this a little bit quicker. But essentially we break up to the upside, right? Then we have another pullback. We get another weekly break of structure. This then becomes our swing low. As we can see, price then switches bearish again, okay? Now we're bearish for quite some time, kind of very small corrective pullbacks. And then we take this low here, which means this is a high. Price then breaks that high to the upside. So now we have a bullish trend change because it breaks and closes above the swing high to form a higher high. But then it's quite volatile. Straight away, it moves back down and it takes out the swing low to form a lower low. Right? So at that point, we are now playing within a bearish swing range between this high and this low. Price pulls all the way back up and then it switches bullish again, right? We get another break of structure to the upside and then we start to pull back. So at that point, this is my swing low and this is my swing high, okay? Because remember, that was my last break of structure. So where's the lowest point that broke that high, right? From after this high is formed, we look back and it was this low here, okay? So this is our new swing low. This is our new swing high up here. We then get a pullback and then we break and close above that high at that point. So when that happens around the 30th of November, 2020, this now becomes our swing low. And obviously we then pull back for this to be our swing high. So then what happens, the price pulls back into our area of demand, right? This weekly demand zone. It reacts, it tries to put in a higher high, right? It tries to break that high, but it fails to do so. So at that point, as we start to come to the downside, we can build trade ideas around that this is a weak weekly low. Why is it weak? It's weak because it failed to do its job. It failed to put in a higher high. So that low eventually gets run, but then eventually we actually do see that weekly break of structure to the downside where that strong weekly low is taken, okay? So as you can see, that was the low that caused the high. Price then pulled back into demand. It tried to form a higher low to break up and form a higher high, but it failed to do so. That weak low got run, and then eventually the strong weekly low got broken right here where we had that weekly break of structure to the downside. So that's our weekly boss. If I just draw that on, okay, let's make it black and a little bit thicker. So that's our weekly break of structure to the downside. Now at that point, where is my new swing range? Well, this is obviously the new low. The swing high is the highest point that broke the low, so it stays in this place, okay? When you get a trend change, the high is still in the same place. So we're now playing within this weekly bearish range, okay? So price would have to break this high at this point for there to be a bullish trend change on the weekly chart. Now, what do we expect after a break of structure? We expect a pullback on that time frame, right? So we never know when that break of structure can occur, right? We could tank for ages before we get that, sorry, not break of structure. We never know when that pullback will occur. We just know that after a break of structure, we expect it, okay? So what are the couple of tools that we can use to kind of give us an indication when the weekly may be pulling back? One is obviously we look for a change of character, right? So we'd want to see the low get taken and then high, and then that would give us a good sign that we're pulling back. Or other things we can look for, right, is demand and supply zones, right? So the next kind of real obvious target I'd be looking for is this kind of weekly buy to sell range down here. Or, well, you can see that it was a flip zone, right? Because we had this weekly supply zone. Price came up into that supply, it reacted, and then it pushed up, led to that bullish trend change, right? Remember when we got that weekly break of structure? So this now becomes a good supply to demand flip, a good area for us to look for shorts to target into before we may see that weekly pullback back up into some of these, points of interest up here. The only other area I'd maybe keep an eye on is these sell to buy wicks here, but it's a bit more of a daily zone that we can probably see more clearly when we jump down to the daily chart. But the kind of main point I would want you guys to take away from when I'm kind of analyzing the weekly chart like this, it's just that I'm aware we've switched bearish, we've broken structure, it's possible we could have a bit of a pullback, and I'm expecting essentially this to continue down, right, at least down into around this range demand down here. Now coming into the week of price action that I'm actually looking for this short trade that I took on Eurodollar, what I had noticed is we had a bit of a minor pullback and we'd pulled back into this previous buy to sell range. Okay, so this buy to sell is a range created supply, right? It's a minor or a decisional created supply that led to the break of structure. Price has just pulled back into that, and then you can start to see that bearish sensitivity coming into price action as well. So that was a bit of a long-winded way of me breaking down the weekly chart there, but that's kind of just because, I'm doing this from a completely blank chart, and I'm just kind of trying to drive the point home of just making sure that you do zoom out the first time you ever analyze a completely blank chart, just to make sure you know where your weekly swing range is. Because remember, as I was saying at the start, if you jumped straight in and suddenly thought that's your weekly range and then we moved up, you would think we're bullish, but actually we're not, because the weekly range is this, right? So actually, if we could pull all the way up here and we'd still be bearish, right? We could still form a lower high. So that's kind of just the long-winded point I really wanted to drive home there. But in terms of just talking about the analysis for this trade, right, as complicated as the weekly chart analysis needs to be, at least for me, and the way I trade, is that we've had a weekly break of structure. We are heavily bearish, right? The long-term downside momentum, or the long-term momentum, is to the downside, but I am expecting we could potentially have a little bit of a weekly pullback. We have just tapped into that previous buy to sell range. So now we can look to potentially target this small weekly low there, down into around this kind of demand created level down here. Daily chart, let's have a look. So the daily chart is pretty simple. I mean, you can see those sell to buy wicks on a weekly chart. It's essentially this sell to buy demand zone on the daily chart. So that'd be our next sort of key level that we could potentially target on the daily. Now, if we zoom in a bit more to the daily range, nice, clean, trending price action here. So lower low, pull back to form a lower high, lower low, lower high, lower low, lower high. And then this is all one swing run to the downside. Okay, so this was our last break of structure on the daily chart there. Okay, and we are within, if I just use the highlighter tool, this is our lower high, right? And this is our daily lower low. So what do we expect after a daily break of structure? We expect a daily pullback. How can we anticipate when that daily pullback may be kicking in? We look for a change of character, right? So when we got that daily break of structure, price moved down, then we got a small pullback, then price moved down, then we got another small pullback, and then price moved down, and it just wicked that low, which means that this then becomes our most recent, small high, internal high. Price then comes up, and obviously it breaks up above that internal high. So that right there is our daily change of character. I'm just going to mark that on, okay? And that daily change of character signals what? It signals that a pullback may be starting, okay? So if we're looking to catch that daily lower high, and we're looking to catch that pro trend move to get that next swing run to the downside to target this week low, we obviously want to be trying to catch that daily lower high. So what are the tools we can use, again, right, to give us that indication that the daily lower high is formed and price is now ready to go? Well, we look for a bearish change of character, right, to tell us that the pullback's over. So at this point, where is the level or the low that I would need to see go for there to be a bearish change of character? Well, if you analyze the price action, once we had that bullish change of character, we moved up. Then this white candle, right, it's an inside bar because it fails to take that candle's high. That means that's a pullback there. And then we all of these candles break the prior candle's high, so that's all part of the up move, and then we pull back, okay? So at this point, if I just delete that line, I would need to see this logo here for there to be a daily bearish change of character, okay? What's the other thing that we can use to help us try and anticipate and time where a pullback may have finished? Supply, okay? Supply and demand. So if we kind of paint the story here, what I would do is look kind of where's the most or the nearest sort of obvious point of interest, and I'd be looking at kind of this buy to sell range here, okay? This daily supply zone, right? Is it valid? Is it a strong zone? Yes, because it led to a break of structure. Is it a flip zone? That's another thing we can do to try and increase the probability of that zone. Well, let's have a look. Well, there was clearly demand over here, right? That led to this break of structure. So that's a pretty decent daily demand zone. You can see it's the liquidity below those lows as well. Price then came into that demand. Now we get the reaction. Remember, the reaction is key. Why? Because that validates that this is a decent demand level. It validates that there were, a decent amount of buy orders in there. Price tries to go up. It tries to make a higher high, but it fails to do so. And then what happens? Then supply steps in and causes the reaction to fail. So the moment we close below the base of the reaction, demand has now failed and flipped to supply, which also led to the break of structure, okay? So this is a structure zone and it's a flip zone, okay? All right, so that's a decent area of interest for us to potentially look for a daily lower high to form. So let's just play price forward a little bit. So we tap into that range and then we get a very, very solid and sharp reaction, clearly showing that there's an overwhelming imbalance of supply entering into the market. And we also now have that daily change of character. So now it's all systems go right to try and look to at least target this daily low or potentially come down in towards this next daily demand level, okay? Now, if you remember, not always, right? It's not a guaranteed rule, but what most likely are those daily changes of characters on the 4-hour time frame? Well, they usually breaks of structure on the 4-hour time frame. So that bullish change of character on the daily to initiate that pullback is most likely a bullish trend change on the 4-hour chart, a swing break of structure to the upside. Likewise, I've actually drawn this wrong because at this point here, right, when price moves up and then we pull back and then we take the high, right, we take that high, then you'd have to adjust your chalk line to the most recent low, which would be this low here, okay? And then within the very next day, then we come down and have that bearish change of character to the downside, okay? I'm just gonna drag this out so you can see a little bit clearer. So hopefully that makes sense. All right, we moved up, we pull back. Once we take the high, that then validates that this is a low, right? Price then hits into supply, and then we have our bearish change of character, which is most likely on the 4-hour chart, not always, but most likely a bearish trend change. So I'll just show you the 4-hour trend here, right? We have this swing movement to the downside. We then pull back to form a lower high. We move down to form a lower low. We pull back to form a lower high. We then come down. Do we break that 4-hour low? Let's have a look. Draw it from the wick, draw it across. Okay, now we've had a 4-hour bearish break of structure down here because we closed below the low. So when we close below the low, where is our swing lower high? It's the highest point that broke this low after it formed. So after it formed, where's the highest point? It's up here, okay? So this becomes our 4-hour swing high, which you can see was our bullish daily change of character, that dotted line, as the 4-hour trend, the swing trend switched bullish. Okay, so at this point here, when we close above, that is the 4-hour swing trend switching bullish. That is a swing boss to the upside, which was the daily change of character, which is allowing the daily to pull back, okay? So the 4-hour trend switched bullish for the daily to pull back up into supply, okay? So we get another pullback, and then we take the high. All right, so we get another 4-hour boss to the upside, then we pull back again. We do not breach that swing low, okay? The 4-hour trend stays intact, and we get another break of structure to the upside. So let me just draw that on. And then we tap into our daily supply zone, and then we get a huge reaction to the downside where we get that daily bearish change of character. What is that daily bearish change of character? It is a 4-hour bearish trend change, okay? That's where the 4-hour swing trend changes to the downside. It changes bearish because we take out this 4-hour higher low to form a lower low. Okay, so now at this point, what has happened? We have had our daily break of structure. So we anticipated a daily pullback, right? The 4-hour switched bullish when we got that swing break of structure to facilitate that daily pullback. It then tapped into daily supply, where we then got the 4-hour then switching bearish as it took out the higher low to form a lower low. So now the 4-hour is bearish, the daily is bearish, and the weekly is bearish. So now we are looking to target at a minimum this weak daily low. Why is it a weak daily low? Because it failed to take out the daily swing high, okay? So now all the timeframes are aligned. We don't just want to jump in short here, okay? Ideally, we want to see price pull back to an area of value. Usually at minimum, the previous buy to sell range, right? This buy to sell range, usually price will come into that, and then you'll see that movement go. The nearest POI is what I'll usually draw on. Now you can see this is kind of just one big straight candle down on the 4-hour chart. So really the nearest supply zone I can see, other than if you were to take the whole buy to sell range, as in this whole buy to sell range, I'll draw on this whole buy to sell range, what would that be in daily chart? It's most likely just that daily bullish candle, right? That's then engulfed. So I want to be a little bit more refined on the 4-hour chart. The nearest sort of supply POI I can see is those buy to sell wicks. Okay, so I'll just draw that on. All right, so now we can look for price to pull back up into this area, or we can wait for price to pull back and form a bearish change of character if it does not tap into our supply, right? Because remember, it does not have to tap into our supply. So let's see, are we going to get a tap into supply? Nope, but what we have is a low. So at this point, right, I'll be looking for price to come into supply, but if price takes out this low here, we would have had a bearish change of character. Okay, so let's just keep track of this a little bit more. Are we going to tap into supply? No, we don't, but we don't have to. We've now had a bearish change of character on the 4-hour chart. So remember, this is our swing range on the 4-hour chart, this high here and this low here. We've had our breaker structure for the trend to switch bearish to align itself with the daily and the weekly. We've pulled back. We were looking for price to come into our supply POI to look for entries, but we don't have to hit it, remember, for a lower high to form, okay? But when we get a bearish change of character to the downside, so the internal structure is now aligned with the swing structure, right? So the pullback is likely to be over. Now we can look to get short on the lower time frames to target the week 4-hour low and ideally the daily low as well, which is obviously quite near the 4-hour low. Right, so let's just put this forward a little bit to see what happens, because at this point here, this is around New York. What happens? We try and then break that 4-hour low to form a lower low, but you can see price wicks it, so it's just a liquidity grab and closes back up above that low. So that at that point is not a break of structure just yet. Remember, we need a close below. So we fast forward this a little bit. What time is this at now? So this is the daily close around that time. So I'm just going to bring this forward to around the time that I get to my charts, okay? So again, what are we looking for? We are looking for, well, the price has pulled back to our daily supply zone. We think the daily pullback is over. The 4 hours now switched bearish. The 4-hour has had a pullback. It didn't quite meet the area of supply that we were looking to get involved with, but we have had a bearish change of character to the downside. We tried to make a lower low. We failed to do so, but it's pretty likely, we're still going to run this week low and this week daily low. Now, if I drop down to the 15-minute chart, because this was coming into Friday where I was looking for my trade short to run that daily low, okay? Now, if we look at the 15-minute chart, we can see at this point, we were clearly bullish, right? We had this swing range. Map it back slightly. Okay, so actually, this was the 4-hour swing high and swing low. And at that point, that range, that 4-hour bearish range, the 15-minute was actually the same range, because for me, this is why you go back and paint the story a little bit, right? That would have been the 15-minute low down here. It was one straight push up to form a higher high. And then we took out the low, which means this would be our high. So you can see how the 15-minute swing range is the same as the 4-hour swing range at this point. Sometimes that can happen. Now, when we took out this low here, the 15-minute low, we did get a closure below. So that means that our swing high is now all the way up here, okay? So this is actually our M15 swing high. So let me just mark that on. And our swing low is all the way down here, okay? So I kind of want to just cover that quickly again. On the 4-hour chart, just zoom out. This is still our swing high and our swing low, because we tried to break to the downside, but we just wicked it. We haven't closed below yet. If we were to close below this low, then this would become our lower high, but that hasn't happened yet. However, on the 15-minute chart, because our low was in the same place as the 4-hour chart, as well as the 15-minute chart, the 15-minute chart did actually close below. So that means we have a new swing range that we're within, and our new lower high is now here, okay? So we're playing within a little bit of a smaller range on the M15 than we were on the 4-hour chart, okay? Now, coming into the London session for this Friday, the 5th of November, I'm aware that price could pull all the way up towards the top of this range, okay? And that's ideal, right? We want to be really selling kind of the high in the range as much as possible, but of course, price does not have to do that. So where is the I can bring this back a little bit back to around 6 a.m. when I get to my desk. So around this time, right? What I do is I just literally mark out the ranges that I'm in. I know where my 4-hour and my 4-hour swing high and my swing low is. I know where my M15 swing high and swing low is now, right? And I know I want to be getting short to target the weak M15 low, to target the 4-hour low, to try and get that 4-hour close below that low, and to try and get the daily, you guessed it, to take out the weak daily low, right? You can see that. So now all the M15, the 4-hour and the daily are all aligned. We're literally just trying to find that final point where price is going to pull back into to find the supply that it needs in order to take out all of those weak lows. So this orange range is the M15 range we're playing within. It's quite a large range, but what I do is I mark out the kind of, the decent POIs that price is near. We have this buy to sell here on the M15. It's a pretty decent supply zone, right? It's a nice sharp pullback and a nice strong push down. So it's obviously a strong zone because it caused and led to a break of structure. Now, how else can we validate the zone? Let's see if there's any, let's paint the story a little bit. So we can see we have this demand over here, right? That clearly took out these highs, right? Pricing came down into that demand level. It reacted, it pushed up, and then supply came into the market for the demand to flip to supply. So that's a pretty decent supply level, right? So we're just following the money here. We're following where the orders are exchanging hands for this whole move to set up. And that's why you can see that when supply came in and pushed price down through demand, price pulled back into it, mitigated the remaining orders that were left in there. And that led to a sharp move that led to that M15 break of structure. So if we're following the money and we're following those series of mitigations, this is at a pretty decent level where that supply last entered into the market. I'll come into my desk around 6 a.m. What you typically see during Asia, so all of this corrective price action within a small range, that is what's called the Asian session range. We can now see we're starting to form a little bit of a double top here. What do we also have? We also have a double bottom at the bottom of the Asian range. So there's tons of liquidity building either side of this range, right? Loads of buy stops above these highs. For anyone who's already short, their stop loss is going to be here, right? Obviously, if they're short, they need to buy back their position if they get stopped out. That's why there's loads of buy stops there. Anyone who's looking to buy the breakout, they think it's going to the moon if we break these highs, they're going to be buying there as well. So there's tons of liquidity for large, in theory, large smart money, the institutional money that looks to want to short here, right? Where that supply is entering to the market. What do they have? They have tons of buy side liquidity to fill their sell positions in order to, essentially use that to facilitate their transactions, to reduce as much slippage that they may experience as possible. And then what do we also have? We have liquidity to target, right? To fuel that move to the downside, where there's tons of sell side liquidity below here. Anyone who's long from the double bottom or looking to sell the breakout. So again, just to quickly summarize this, we have had the daily pullback to, I'll zoom out, we've had the daily pullback to supply, right? We've waited for the 4-hour to now switch bearish. The M15 switched bearish at the same point because we were within the same range, the 4-hour and the M15. Now the 4-hour failed to, get rid of those lines, failed to close below the low. So the 4-hour high is still up here at this point. However, on the M15, we did get a closure below. So we just look at where was the highest point that took out this low. It was this point on the M15. That's why we are now playing within this range. And this is the 4-hour range, okay? So at this point, we are aware that the M15 could pull all the way back up here and still go, right? But it doesn't have to do that. If we see a nice POI, right, price does not have to pull back above the EQ. We can sell in the discount if we build enough confidence. Coming into the London session on Friday, we have a really nice, clean Asia Asian session range, right, with a double top and a double bottom, clear liquidity building on both sides. We have this nice extreme structural zone here. We follow the mitigations, right? We had this nice supply flip. That was the last mitigation that led to the break of structure. So this for me is a really decent zone. So what I would do is I would set my alert at this level, and then once it goes off, drop down to the M1 to see if it gives me my execution time frame. Now, if you trade the M15, you can trade this directly, of course. You can obviously take a trade on the distal. You can be quite tight to that there, or you may want to cover the actual swing high because technically, you could draw your supply zone as big as that if you want to. It's quite a big zone, or you enter an EQ, but of course you may not be tagged. Now, the other reason why I'd prefer to use a confirmation entry on the lower time frames in this area is because you're selling in the discount. So there's every possibility, right, that price could come higher up into the range before we go. Another thing as well that you need to bear in mind with this of why potentially this might not hold and the M15 could actually switch bullish is because remember again on the 4-hour chart, what happened? The 4-hour chart at that point had failed to do its job. It failed to close below that low. So technically this is structurally a weak high at the moment because it's failed to do its job. So you have to bear that in mind, that potentially because we've had a liquidity grab here, there is the possibility, a small possibility that we could come up higher, potentially mitigate, one of these supply zones up here, and then we go. All right, so you always have to bear that in mind. But this is why, and my advice to you guys is don't get too caught up in liquidity and all of that. Try and keep your trading as simple as possible. And you have to ask yourself right now, where is the path of least resistance? Everything's bearish. We've had a pullback into supply. The 4 hours bearish, the M15 is bearish. There's tons of weak lows forming here. You can see this big double bottom forming. For me, the easy trade, keep it simple, don't overcomplicate it. We've got a real clear POI. We're following the mitigations, right? This is a really good area to look to short. We've swept liquidity into our POI. We've got liquidity to target and tons of weak lows below us. I'm more than happy to hit a short trade there with decent risk reward if the M1 entry model sets up. So let's drop down to the 1 minute. Now my alert's gone off, right? Now we're within our M15 POI. So at this point, the first thing I'm always thinking of once we get into a POI is I'm not going to enter a trade until I get a change of character on my execution time frame. So obviously if I'm looking for an M1 entry, I need to see an M1 chock. So all I do is I mark out where is the low that I need to see get wicked in order for there to be a chock. But if you look, right, all of these candles are part of the up move, then we pull back, then we move up, then we pull back, and then we move up, and then we pull back. So at this point, this is the last low, okay? So that's the low that I need to see get wicked for there to be a change of character, okay? So prices into our POI. Let's play this forward a little bit and see what happens. We're building those nice equal highs. So now we have those highs get swept, right? They get liquidated. Anyone who's, short early. Now, when we break up that high, that means I need to adjust this to the most recent low. Now, for some of you, that may be there for you. For me, I am as aggressive as you can be with change of character. And for me, that's an inside bar, right? That white candle. So I will take the inside bar because what that means is price moved up, it pulled back, it came up, right? It pulled back, it ranged in here, it moved up. And then this candle failed to break the prior candle high. So that's a pullback and then we go. So that for me is a low, okay? I'm pretty aggressive with change of character because it allows me to get into trades pretty early. So now we've had a hard time frame mitigation into our zone. We've had a liquidation. Now all I'm waiting for is that change of character before I look for an entry. Okay, now we've wicked that low. We have had a change of character. So now what I'm looking for is for the flip, right? I'm looking for where is price going to react to show me where the demand is. So play it forward. We move down. Okay, now we move up, okay? We have this bullish movement back up. So now what I do is I look left and go, doesn't make sense. I'll be reacting off something to validate a level of demand. And it looks like we are reacting off this wick, right? This fractal refinement. There will be a nice clean 15-second demand zone within there. So that reaction, that pullback tells me that there's M1 demand here. Okay, so now I've had my hard time frame mitigation, liquidation. I've had my change of character. Now we are moving into demand. So now what I need to see is I need to see this demand level fail. So I mark out the base of the reaction, right? And now what I want to see is price break the base of this reaction. And that will show me that supply is in control. So let's see. Okay, now we have broken and closed below. So now we have a confirmed flip. So remember, price has come into our level of demand. It's reacted, which validates our level of demand. It's tried to put in a higher high, but it's failed to breach the high, so it's failed to do its job. As soon as price then breaks and closes below the base of the reaction point, now demand has flipped to supply, okay? So where did that supply come into the market in order to take control, in order to overpower demand? Well, it's from the base of the reaction to the high of the reaction, okay? Because that is the buy to sell, that is the supply. So anywhere within this buy to sell, that box, anywhere within that orange box, is the supply that came into the market to overpower demand and take control. So now you essentially can short anywhere within this box. Okay, it's about a 2-pip sized box, and that's more than valid, obviously, depending on what your trade plan is. For me, currently at the time of recording, I like to trade with a fixed 2-pip stop loss on euro dollar. And what I'll tend to do is take the whole range like that. And if I can get my 2-pip stop above the high protected, then I'll take that. Now, in this case, right, I wanted to cover this swing high because I wasn't sure, especially as it was unmitigated, if price would maybe come up to that extreme zone there, okay? So what I did is I took a trade around here and I had my stop just above the high. Now, because this all happened quite quickly, right, and price is here, at this point, the moment price has closed below, this is literally when you need to be ready to enter. Okay, you have to be quick within one chart, because what can happen at this point, right, price is here, is the very next candle, price can tap in, like literally with the next candle, and then you're off. So that's why you have to be really mechanical and know exactly what you're looking for. And I know that once I've had my liquidation, right, into a higher time frame mitigation, I've already had my change of character. The last thing I need to see is the flip, right? We've had the reaction, price has now broken and closed below the base of the reaction. So I know where the flip is, I know where the supply is that took control. This is where I want to enter. So now the moment that price enters this box, I need to be ready to get short, okay? So the next few candles, price basically moves into the zone, and then this is where I didn't have enough time to set an order, so I just hit a market execute, right? Around here as price came in. Let's see, I think we moved up a little bit higher. Yeah, there we go. Because I ended up getting a 1.7 pip stop, but I had my stop just above the high, so it was roughly around here. And then I got tagged into the trade, and then yeah, obviously just let this play out. So think about targets, right? Where do we want to target this trade? Well, if you zoom out, right, my ultimate target, like I was saying this entire time, was to target that week daily low, right, which is all the way, I think further than actually. Anyway, you know where the week daily low is, it's pretty near that 4 hour low, right? Or at a minimum, if we think we've caught the daily, the M15 lower high, I should say, we can target that low there, right? Now, at this time, this was a trade on Friday, and NFP was coming up around midday. NFP is basically US employment numbers. Typically, it sees quite a large intraday reaction, and I don't really want to hold the bulk of my volume through that trade if I'm running in decent profits. So my first decent target was this M15 low down here, because there's big double bottom there. I know there's tons of liquidity. And what do we expect after that liquidity is swept? Remember, we either expect a pullback or a reversal. So these are really good profiting take it levels to take profit from, okay? So I just pay that forward. Price was running around, yeah, just over 12 hour at those lows. And that's where I banked around 90% of my volume, okay? Now, the reason why I did that, like I just said, is because of price was coming into NFP, and I know there's a lot of large intraday volatility, so I just play price forward, and you can see what happens as the news came in. Now, typically what you'll see during kind of these news announcements, especially if price breaks a major swing low and taps into liquidity, is that move will often retrace. So when I had the small balance of the trade remaining, and I saw the news come out, I'm hoping, there we go. As soon as we broke those lows and we took the daily low as well, I knew it was very likely we were going to see a bit of a sharp retrace. And then that's when I banked my profit for around 23R. I'll just flash that up on the screen if I can edit that in. Essentially just manually exited the remaining volume at that point. So yeah, I kind of went through this trade almost painfully slowly. My thought process when I'm doing this live market is obviously a hell of a lot quicker. You don't need to be this pedantic, talking through everything, but I kind of just want to, obviously for some of you guys who are new, seeing these things for the first time, hopefully it helps to just really go through things bit by bit. Now, when you're in the live market, this is happening so slowly, right? You on the weekend, you do your analysis, you know where all your swing highs and your swing lows are. Price is moving very, very slowly on the M15 and the 4 hour time frame. You're in the same swing range for usually a number of days. You have your POI marked out, probably even the night before. You're just waiting for your alert to set. You know roughly that you're going to be targeting those weak lows. As soon as price comes in, that's just when you then need to be in the bull, right? Around the start of the London session, just before London Open, we have our high time frame mitigation, liquidation. Just zoom in. All right, chalk. Wait for price to react, that validates our demand. Wait for price to close below the reaction, that shows me where supply took control, where demand flipped to supply. Let price come back into the area, right, whether you set a limit or a market execution. I ended up covering the high, which was lucky I did, because price did go a little bit higher than actually the zone. But this is where you got to be patient, okay, as well, and don't let emotions get in the way. You can see it's quite choppy and quite horrible price action, to be honest. The first hour or so being in the trade, but when that happens, literally mechanical, right? Let the market do the hard work for you. I know I'm going to take 20% off at 4R to cover my stop loss. And at that point, I have zero risk. Then you just leave it. I know the areas in which I want to take profit. Bulk of my volume off around these double bottom lows at that M15 low, right? It's on a swing low. The swing low's down here, but there, because I know it's likely we're going to have a pullback. Okay, in this case that we didn't, but 12R by anyone's standards is an amazing trade, okay? Really happy volume, end of the week, happy volume, happy with that trade, end of the week. Bank your profits, move on, because coming into that news announcement, right, let's just imagine I'm trying to hold on my full volume and then price comes up and spikes me out. I'm going to feel like a bit of a mug, right? So pay yourself, that's how you get consistency. That's how you build your account. That's how you start to benefit from the compound growth. You don't need to swing for the fences with your full volume on. Of course you can, you don't have to listen to me, do what works for you, but I'm just, guiding you guys with the way that I, view and approach the market. And then, eventually after the news, once we got that break below the lows, I just manually exited. So hopefully that was useful. You guys can kind of see my thought process from really all starting with a daily time frame. We know we're in a very clear bearish trend. We'd pull back to an area of supply within the previous range. We'd had a very strong bearish reaction from that supply zone. We had a daily bearish change of character, giving us a real good signal now that that daily lower high had formed, and we can target that weak daily low. We dropped down to the 4-hour chart. The 4-hour trend had clearly switched bearish, right, when we took out this swing low here. So then we were then playing within this swing range here. We are ideally hoping price would come to that nearest 4-hour POI, but of course it doesn't have to. Take a message from the market, right? Price game there, but then we get a change of character to the downside there. So now the internal 4-hour structure at this point is now bearish. It's aligned with the swing structure, right? It's obviously a pretty good sign, not a guarantee, but a pretty good sign that we're ready to now take out this low and form that lower low. It tried to do that during the Thursday session. It did wick the low, and that's where we got the M15 lower low. But remember, the 4-hour didn't close, so it's just a bit of a grab of liquidity. But, at that point, we can still look for shorts to then actually get that true break of structure where we then took out the daily lows as well. So that's when we dropped down to the 15-minute chart coming into Friday morning on the 5th of November, just before the London session. And this is just where it was so clean for me. Obviously I'd been looking at these zones before in the previous sessions. That's why, it comes quite easy. You're probably thinking, how do I spot this and how do I spot this? But it's because this would have been an area I was looking at the previous day or Wednesday, I don't know when it was, would have been looking for longs from here. Price obviously melted straight down and never gave us confirmation. So when that happens and a zone that I'm looking at to trade from, gets smashed through like that, you don't just think, oh, well, it didn't work. Go, no. Where did the supply come into the market in order to make this zone fail? Well, here was the reaction. There was the push down. Okay, well, that becomes a decent area of interest. So there on the 4th of November, that was a trade, right? We can look for trades in around there, right? To then get that 15-minute lower low, right? That was a really decent area to look for trades. Then we come into Friday, and now we know that was the last series of mitigation. But following the money, this then becomes a really decent area to look for. Beautiful liquidity to be swept, liquidity to target, tons of weak lows, right, with the 4-hour, the M15 and the daily. Obviously, you can trade this directly, or we can drop down to the M1 for extra confirmation and refinement. Alert goes off on the M1. What do we get? Higher time frame mitigation, liquidation, change of character, wait for the reaction to happen to validate where the demand is. We get the reaction, wait for price to break the base of the reaction. Now, whether you want a candle closure or just a wick break, I'm going to leave that to you. Waiting for the candle closure will definitely boost your strike rate. It is more significant. Once we get the candle closure, you know that you can enter anywhere within that buy to sell range. If you trade ranges, some of you may not trade ranges. Some of you may always take the refined candle, and that's fine too, right? You would have been tagged in this point as well. Just clean it up, so you know what I mean, right? These are all where, there's optionality within the strategy and how you want to trade. Just try and be consistent with what you do, okay? So if you always take a single candle like that, the refined candle, always do that. Okay, so if price then taps into, let's just say, the base of the range and goes without you, you can't be pissed off. That's not a mistrade for you because it didn't meet your rules. So for me personally, I generally take the whole range if I can. Okay, let me summarize and keep this even more simple. I will draw my flip zone on the whole range, but remember, I always want a fixed 2-pip stop loss, and I need my stop loss to be protected. Protecting my stop loss defines where my entry goes. So if I know that this 2-pip can get me above the high, then that's where my entry has to be, okay? Which just so happens to be the EQ of the range, which just so happens to be around, on this refined candle, okay? But I will personally take the whole range as long as I can get my 2-pip stop protected where I want it protected. We get tagged into the trade. Now, a lot of people, right, they'll get tagged in and then they'll see price shoot up into their stop loss. They'll be emotional. They might think, okay, well, I'm going to take a loss. I don't want to take a full loss. And they'll manually exit the trade. Don't do that. Don't be that person, right? That's just, I'm trying to use PG words here. It's stupid trading, right? It's emotional trading. You're professional traders. You don't need to do that. The risk to reward is always hugely on your side with the strategy, okay? Once you've entered the trade, that's it, right? Ride or die. Let the market do the hard work for you. Let your edge play out. Let the numbers fall where they will fall, right? That's why we have this really easy a mechanical clear-cut way of removing risk, where you would set your order for 4R to partially remove 20% of your volume. That leaves your stop loss open, and then pick where you want to take up the rest of your volume. Whether you are someone who use purely fixed R, so what I mean by that is you may always bank X amount of profit at 10R, for example, so it doesn't depend on technical levels. That's a great idea as well. Maybe you like technical levels. Okay, big obvious levels in the market. Clearly going to be liquidity here. Another good level to take profits. And then final level take profits at the M15 and week daily lows. After news, big retrace, take your money, be happy for the weekend, bank and move on. So that wraps up that kind of trade recap. Yeah, hopefully you guys have taken some value from that. Yeah, and you can just kind of see sort of my own style, my thought process of how I use all these concepts together. But I do try to keep it as simple as possible. And kind of, yeah, I guess I'll leave you with this kind of one thought. The main thing you want to do, no matter what time frames you use, right? Obviously have a higher time frame, a medium time frame, and then potentially a lower time frame for your execution. So as you guys know, for me, my higher time frame is my 4-hour chart, my medium time frame is my M15, and my lower time frame execution is the M1. As long as you have your swing ranges correctly mapped on your higher time frame and your medium time frame. So what I mean by that is no matter what is going on in the live market, I always have the range that I am currently within mapped out. Okay, so let's say this was a live market right now, I would have essentially like I use the little dots just to kind of visually see it, but I would have my swing low and my swing high, and then I know straight away this is the 4-hour range we're playing within. Okay, and that's it. And I just know, that tells me everything I need to know really. I mark out on the most recent POIs that I'm interested in, and then I'm waiting for price to either pull back or pay the continuation. And I do the same within 15. I would mark out the range I'm within. I would mark out the POIs, the nearest supply or demand zones that I'm interested in trading within. I set my alerts on them, and then once the alerts go off, I look to see if my M1 entry model presents itself, and then I look for my technical targets. Okay, and that's it. Hopefully, yeah, I'll leave that there before I rant any longer. Don't want this video going on longer, but hopefully, yeah, that's a decent way of you guys seeing how to try and keep things as simple as possible, and just how powerful this strategy is. Now, what I would recommend as well is if you go into the Photon service and you look at the weekly watch list breakdowns, and you look at it for I believe, well, it's for this week that just happened. So I believe the Saturday was the 6th or 7th of November. If you look essentially for the weekly watch list breakdown that covered this week's price action, you will see how many high probability trades there were each of this week. And I think it's a really good video to watch for you guys to see a recap of kind of all of that. But anyway, I'll leave it there. See you guys in the next one.